Welcome to Integral Talks, a podcast series brought to you by Integral Advisors, where we dive into the world of compliance, risk management, and due diligence, and provide you with expert insight and analysis to help you make more informed business decisions. Hello, and welcome to Integral Talks, a monthly podcast series by Integral Advisors that delivers fresh, smart, and engaging conversations with leaders and stakeholders in and around what seems to be the most thankless role in the business world today, and that it's risk and compliance. My name is Alberto Laportilla, and I'm the president and CEO of Integral Advisors. Banks in South Florida have the unique position of operating as a community bank, but also as an international bank, given Miami's longstanding reputation as the gateway to the Americas and the Caribbean. Competing in this sector, gaining an advantage, differentiating yourself while maintaining a solid approach to governance and regulatory compliance is at the forefront of all major decisions for a CEO. Today, we have invited a very special guest to talk about the challenges, opportunities, and outlook for growth and expansion in the coming years. Calixto Garcia-Velez is president and CEO of Banesco USA, a Florida state-chartered bank with $3.4 billion in assets. He was recently named to the Florida Bankers Association's board of directors. He was also recently named a Banking and Finance 2023 Power Leader by the South Florida Business Journal in recognition of his influential executive leadership throughout South Florida. And welcome, Calixto. Good morning.
Good morning. Thank you, Alberto. Thank you for having me on today.
Yep. Thank you for participating. Very excited to have you as our guest this morning. So I want to start with just the latest news that I've seen in terms of what's happening with the financial sector and the banking sector. So there have been stories of the FDIC and the Fed coming out with new requirements of banks that's going to create tougher oversight. It's caused a bit of an effect on bank stocks. With rising interest rates over the last year, that obviously has an impact on financial institutions. So can you tell us, and while some of these oversight rules are more for larger regional banks in the wake of the collapse of Silicon Valley Bank and Signature Bank back in March, but just curious as to, from your perspective, what sort of impact has that had, or do you see that having? And do you expect that there be a trickle down effect from these new sort of requirements from the Fed?
There's no question that I think it's going to impact all banks, Alberto. The last few months have been very tumultuous. Unfortunately, I think it came out of left field for most bankers and for most people. The most recent turmoil in the banking industry, and it's unfortunate because I think that the banking industry is much, much, much more solid and much better positioned than it was, pre-Great Recession, going back to 2008. And so it created, I think, some anxiety and some concern around bank safety for consumers and business owners. And so, yeah, it has affected all of us. From a regulatory standpoint, my expectation is that those new regulations will likely impact larger banks. Where we are positioned in South Florida and Puerto Rico, that we operate a full service bank, we are a community bank and we operate in the community bank space. And we as community bankers are hoping that the regulators will differentiate the size of banks, the complexity of the banks, the lines of business in which we operate, so that they apply regulation in a way that makes sense and is fair to all. So my expectation is that the larger regionals will certainly have a much bigger impact, but it's impossible to think that it won't affect us all.
Right. And so I know that your bank is in growth mode and looking to expand and grow the deposit base. And so how do you see, or sort of, what are the best opportunities for the bank for growth in the coming 12 to 24 months?
We are certainly in growth mode. And as you know, Alberto, we were very fortunate. We were the only bank in the state of Florida and Puerto Rico to receive funds from a U.S. Treasury program called the Emergency Capital Investment Program, or ECIP, as it's known in the industry. And we were granted $250 million in perpetual capital as a minority depository institution to accelerate the growth of our bank within the minority communities. And so we certainly have lots of capital to deploy. And as you leverage that, that's billions of dollars worth of lending that we can do over the course of the 10-year program. The beauty is that it's perpetual, so it does not have to get repaid.
Right.
We will pay a dividend to the U.S. Treasury, which is logical, but we can count on that money and how to scale the bank for the long term. So that's some background. In addition to the fact that we are a privately owned bank, and our owners also injected additional capital and have a commitment to continue to inject capital over the next 3 years to further allow us or give us the fuel for the growth that we expect. Honestly, when the crisis, if you want to call it that, began, and I don't like to call it a crisis because it wasn't widespread. It was very controlled, right? So I shouldn't say crisis. I think when the turmoil began, it was an all hands on deck. We really had to work with our teams to inform them and put together some talking points and some client communications that clearly explained why Banesco was different than what they were reading in the headlines. Things like 65% of our depositors are FDIC insured, very different from the banks that failed. The majority, our concentration of clients is much more granular, smaller clients. We don't have that huge, client profile which some of these banks that failed had. We don't have those riskier profile in the, let's call it, technology world from a lending and a leverage perspective. So we look more like a traditional community bank in South Florida, which is very different than a community bank and elsewhere in the United States.
Sure.
And so at the beginning, we lost a little bit of money. That there was a flight to capital that we all read about, and the flight to capital was primarily to the national banks. But I have to tell you, it was minuscule in our case. And as time progressed and as we got the message out there of how we were different, interestingly enough, we started to pick up money from other banks because there was a flight to quality. And when you look at our capital ratios and you look at our regulatory track record and the fact that the U.S. Treasury just invested $250 million in our bank, that was probably our biggest selling point to say, listen, if the U.S. Treasury entrusted us with $250 million worth of capital, rest assured they did their due diligence, and we are a bank in a good, safe position.
Right, and
so it actually ended up being a positive for us. After the initial couple of weeks. Yeah.
So can you tell the audience a little bit about sort of again, just to stay on the topic of growth. So over the next, say, 12 to 24 months, or maybe even further out. I know we have an election next year in the United States, but putting that aside, do you foresee most of the growth coming from domestic, or do you see international growing more? Like, how do you foresee the growth coming, domestic versus international market for your bank?
So let me start by saying, for our audience that may not know who Banesco is, right? So Banesco, we are the U.S. subsidiary of a larger financial group of Banesco banks. We operate in Panama, we operate in Dominican Republic, Spain, Portugal, Venezuela, and a few other rep offices around the world. Every one of the banks within the Banesco families are independently run, independently owned. There's no holding company, there's no consolidation. So we are an independent Florida chartered bank. But the fact that we have presence through our affiliates in other countries, it is very helpful for us, and we could leverage that in terms of growth. And so to answer your question specifically, the beauty of being a South Florida-based bank and having the benefit of these banks' affiliates overseas, we count on the international community for a great source of deposits. Our international clients are our most loyal clients. They are here because they're looking for flight to quality safety. And certainly our bank fits that profile. And in Latin America, our brand is fairly well known. And so that certainly helps us from sourcing new clients. They tend to be less They tend to be, like I said, more loyal, less interest rate sensitive because their focus is on safety. And so long as you provide them the level of service that they deserve and expect, they are very sticky deposits. Now, we don't lend in the region. We do not lend overseas because we are a Florida U.S. chartered bank. But we do lend to these clients that, for example, may be buying a second home or an apartment or a house in South Florida or somewhere for vacation or for their children who may live here. So we do provide foreign national loans. So that is something that we do provide for them. But our real big focus as a bank is on the commercial side. So we are very heavy in commercial real estate and commercial and industrial lending. So for those of you that don't know what commercial and industrial, or C&I, as it's called in our industry, is lending money to operating companies. And that's really where we are very strong. We have a very nice book of business, and we're very proud of what we've built over time in that segment.
So I wanted to ask you, we work a lot in Latin America, and one of the things I've always said is that we know the region. We, being in South Florida, know the region because we work with them day to day, and every country is different. There's idiosyncrasies that each country has, even culturally. So every country is different, and every country goes through their ups and downs. So we have seen in the last couple of weeks, where maybe a couple of months, there's been a lot of activity because there's elections coming up in multiple countries. There was sadly an assassination of a candidate in Ecuador. There's been some allegations of corruption in Guatemala. There is a presidential candidate in Argentina who has talked about shutting down the central bank. So political turmoil is something that, as a CEO of a community bank that has a large exposure in Latin America, has to deal with on a regular basis. So how do you see that impacting your ability to impacting your growth strategy for in Latin America particularly?
Alberto, it's a sad reality, but I think you and I both know that that's been the history of our region,
right?
As in our lifetimes, right? Political and
Turmoil.
Economic ups and downs, and it's sad, but it is reality. And unfortunately for those countries, but fortunately for South Florida banks, typically we benefit on both sides of those swings, right? So when countries are booming and families and companies are making money, they tend to stock away some of their money or stash in Miami as part of their safety, keeping their money out of that, out of their country. And when the flip side, when there's political instability or economic instability in their country, they bring their safety money, right? And so what's interesting to us, and in my 30-year career in banking, you see the waves, right? I remember in the 80s, it was both physical people's migration and money coming from Central America during the days of the revolution in Nicaragua, Sandinistas, et cetera. And then you saw it go to Colombia during the very tough years of the cartels and the drug money, et cetera.
Right.
And then most recently, a couple times in my career, we've seen waves of money coming from Argentina in search of safety. Not to mention Venezuela, which has always been probably the largest depositors in Miami, from building Brickell Avenue back in the 80s. During the boom of the oil years, to fleeing the leftist revolution of Chavez.
Correct.
So bottom line, what I'm trying to say to you is, good times or bad times, there's always a flow of money into South Florida, just from different countries.
Right. Yeah.
And it depends on what's happening. And so, yes, I and my team have to be very vigilant as to what's happening and where. But frankly, it's more from where are the opportunities, right? Because when you see a leftist government get elected, like in Colombia, most recently, we attack, right? We know our Colombian clients are anxious, and so that's an opportunity for us.
Yeah.
And so, yes, we are very mindful, but because we don't have credit exposure in our U.S. bank, that's not much of a concern. But certainly our affiliates in the region do obviously have that different risk that we have.
Right, right. So just to stay on a little bit on this point, and it just drill down on this one couple of laws. I'm curious to know from your perspective how, what sort of impact it's had on your bank. But so there have been two laws that have been passed in the state of Florida, and so the first one I want to ask you about is I believe it's called Chapter 2022-2023, which says that select persons from foreign countries of concern, certain foreign countries of concern, which include Venezuela, Cuba, Russia, China, cannot directly or indirectly own property in and around military installations and
ports,
yeah. Airport, seaport. Yeah. And while it's very specific that it says, select persons from some of these countries, we have a very large Hispanic community, and a very large percentage of that is Cuban and Venezuelan. So what sort of impact has that had, if any, on how you have tackled potential lending strategies and relationships with these types of customers?
Look, generally speaking, we have not seen an impact yet.
Okay.
And I'll focus on the yet because it's a new law, and I think we're all trying to figure out how to navigate that. Now, South Florida banks have stopped lending years ago to Venezuelan nationals because there was a regulation passed that if your source of repayment came from Venezuela, you had to reserve 100% of your loan amount. And I forget the name of that particular regulation. So there hasn't been lending to Venezuelan nationals whose source of income comes from Venezuela for years. So I don't think that's going to be much of a concern. I mean, that doesn't mean that you can't lend to a Venezuelan who lives in South Florida or is a legal resident of South Florida. That's different.
Right.
So I don't know what the long-term impact of that law is going to be. I think we're all trying to figure it out. As you know, in South Florida, we don't have too many Asians or Chinese investors. We do have Russians, right. Particularly in a certain part of the city, right? The northern end of Miami-Dade County does have a large Russian community. But again, with the sanctions due to the Ukrainian war, we're not lending to them anyway. So I honestly, I think it's more of a political statement or a political play than it is realistically going to be an impact.
Yeah.
Now, I do worry. Sorry, I didn't finish a thought here. Yeah. What I do worry about is if this remains on the books for a long time, and if any one of these countries open up, how do we manage that? How do we monitor that? Distances from seaports, for example, it could get complicated.
Yeah. Yeah, because the airport in Miami is right in the middle of the city, and the seaport is. I mean, everything is within 20 minutes drive time in Miami.
Realistically speaking,
if there's no traffic, right? Of course, if there's no traffic. But yeah,
if any one of these, let's call it nationalities, started to invest in South Florida, and these laws got in the way, it basically would shut us down because I think the radius around any one of those, as the law is written, would prohibit lending anywhere in South Florida. Right.
Because all the banks, you and all the other banks that operate in Miami, they're all around, very, very near those installations and infrastructures. You mentioned Russia, and I wanted to ask you about that. So, also, obviously with Russian sanctions and happening, it seems like there's updates and modifications to the blocked persons lists. It's weekly, and it happens 2 to 3 times a week on average. Just looking at the last few months of OFAC's list or especially designated nationals list updates. I think you mentioned that you don't really lend to Russian entities or Russian individuals. So was it something you were doing previously? I'm curious to know what sort of how that changed, if anything, and what sort of impact that might have had or has had on the bank.
It's never been a niche of ours, and it really has had no impact, thankfully.
Yeah, thankfully. because we know that there are a lot of Russian, but you mentioned second homes, right? We know a lot of Russians having second homes here, Russian oligarchs having real estate here in South Florida. So there is exposure in South Florida, but it's fortunate that your bank is not part of that. So kudos to you on that. And then I wanted to also ask you about another law, which is the Florida anti-ESG bill that was it became effective July 1, I believe. And during our last podcast, we interviewed two legal experts, Carl Fernaris and Marina Oman, to talk about the challenges that banks face. And that's a little bit more complex because it's a law that essentially says that banks cannot apply ESG, which stands for environmental, social, and governance standards or criteria when they're opening an account, i.e., gun manufacturer that in the past some banks have prohibited having relationships with because perhaps those types of, that industry has not aligned with the corporate values of the bank or its shareholders, is now prohibited in the state of Florida. You have to quantify pretty detailed why it is you would not open an account, and so it's started this process of financial institutions scrubbing their policy, making sure that they don't have anything like that. So, and I know there was an attestation that was requirement. I think July 1. I'm sure that was submitted by Banesco. But curious to know, we heard from legal experts last month, but now I'm curious to know from inside your perspective how, what steps you can tell us that were taken and what impact do you see that going forward in terms of the types of customers that you want to work with?
Maybe I shouldn't say it, but I will. I personally find the law to be intrusive. I think that it is overreaching, particularly if it's a privately owned bank. We shouldn't be mandated things like that of what we can and cannot do, is my personal opinion.
Right.
And the reality is I've been a banker, like I said, for over 30 years. And there are good reasons why we may choose not to lend or do business with a certain industry. And the reality is that this law forced us, and I think probably every bank that I know, in speaking to my colleagues, to have to modify their policies. I'm going to give you an example. I think you chose one that is pretty industry standard, is gun manufacturers, gun distributors, because of all of the complexities that come with that industry. Banks, in my mind, every bank I've ever worked for has had that as prohibited industries, that those policies have had to be modified. Things like pornography, things like anything in the adult entertainment industry are pretty standard in the banking industry. And there are select banks that may choose to play in that role, in that world. But I was very disappointed to see that. I think we were all very displeased. And unfortunately, yeah, we did modify policies, and I did have to certify that the bank was in compliance. Yeah.
Yeah. No, I hear you. I know. I hear what you're saying. And yes, it's politics. Unfortunately, that is intruding in day-to-day business in the state of Florida. And it is what it is, right? That's the world we live in today. We live in a very politically divisive world today. So switching gears, we've talked also in the past and previous podcasts about fintech and digital technologies and digital payments and online banking and all. So where do you see a bank like Banesco? I know you're continuing forward on your strategy, but do you feel like there is any kind of competitive concerns on your end with non-bank financial institutions banking customers in, say, Latin America, who normally wouldn't be banked by a Banesco? Say your Banesco affiliate in Panama or your Banesco affiliate in the DR. So how do you see that space intruding, to use your word, on your day-to-day and your outlook for the future?
Look, I think it would be a huge mistake for a banker to stick their head in the sand and think that this is not going to impact our business. It already has.
Right.
Just look at the movement of money and payment platforms. Completely disrupted the industry, whether it be Zelle or Venmo or PayPal, or just online banking and the ability to transfer money seamlessly, or mobile banking, I should say. Fintechs have already disrupted our industry, and they will continue to disrupt our industry. And so I think you have two ways. We're at a crossroads. You either put your head in the sand and think that it's not going to impact you, and I think those banks will be in big trouble. Or you can do what we've chosen to do, which is embrace it. One of our pillars of our banks globally is innovation and technology. And so we've chosen to embrace it. We've chosen to partner with fintechs, leverage their technology, leverage their skill set, and bring it to our client base. And so I view it as an opportunity for us to evolve. And like they say, you evolve or die.
Yeah.
And so I am a fervent believer in embracing fintech, figuring out how to partner with them, how do we leverage it, how do we use the technology for the benefit of our clients. And we've done that, and it's proven to be very successful, and I think it's the right way to go.
And do you so you don't see it as necessarily it's you versus them, it's you and them together collaborating, working to service the financial needs of the marketplace?
Sure. I do, because I think for many fintechs, partnering with banks is a way to scale their business. Right. And I'm going to use an example, right? Zelle. Lots of community banks really struggled with this Zelle product because it's very hard to compete if you don't offer Zelle. We were, I believe, if not the first or the second bank to offer Zelle to our Latin American clients. And so we chose to embrace it. We were early adapters, and we raced to make it available to foreign clients. And that has proven to be a huge success, because having Zelle, amazing how many of our clients have relatives or children, particularly in the United States, and the ability to transfer money to family members or to providers. If you own a second home and you have a handyman or a pool service or your fumigator, what you name it, the ability to pay all of those people using the Zelle platform is a big benefit. So there's an example that we were early adopters. We were quite frankly very innovative and very I think revolutionary in getting that to our Latin American clients, and that's an example of having worked out very well.
So in addition to Zelle, are there other, do you see other fintechs? Where else do you see potential for your bank to leverage fintech going forward? So you've talked about Zelle, which is a classic example, but going forward, where do you see more?
Another example is our mobile banking and online banking platform that right. Our core system, our core provider offered a solution, but frankly, was okay for a community bank, but it wasn't great. We chose to partner with, I think, the best online mobile banking provider. It's a US fintech company. We adopted that. So our clients, the platform that our clients are transacting in mobile and online is a fintech. And though they are very cutting edge and they're constantly bringing out new products and solutions. And so we could very easily and very quickly roll that out to our clients. And so that's another example. And frankly, not that you asked me, but we're seeing less and less volume of clients visiting branches every single day.
Right.
We've been saying this was going to happen since the days that the ATMs were introduced. And then we said it was going to happen when online banking got introduced years ago, but didn't really happen. Now it's happening. And I think it's mobile banking and fintechs are the reason why it's happening. And obviously the pandemic was a huge
catalyst.
Impact.
Yeah,
catalyst. That's right. The word for that.
Sure.
And so, I think adopting and partnering with fintechs in this world where people aren't visiting branches because they don't have to, is a good thing.
And it's interesting because we know, growing up in South Florida and working in Latin America our entire career, the face-to-face culture is traditionally very important in Latin America. I mean, going to a place like Panama or in Guatemala or in Dominican Republic and meeting with clients or potential clients face-to-face is very valuable and very it's a way to build a relationship. It's the classic way, and it's still a custom. But do you see that? I mean, I know you have now the next generation of Latin American businessmen who are a little bit more cutting edge and innovative. And do you see that changing? I mean, are you still? I know you have a thriving international practice, and your team is still going out and visiting, right? Potential clients. Do you see that changing now with this sort of next generation of Latin American business folks?
Let me say it this way. I think in the past, it was essential. It was required.
Right.
You had to get on a plane and you had to visit your clients and you had to press the flesh, as we say, and see them and build that relationship. And you had to do it. You didn't have a choice. I think now it's more of an option because clients now can bank, like we're saying, digitally, remotely, and things like this, right? Whether it be, using technology to meet with clients, it certainly plays a role. So I think it's, while it's no longer essential and a requirement, I think it is important. And it's part of the relationship building. And it's part of the relationship building, not because you have to, because we can transact and we can do things via video or using technology and platforms. But nothing replaces the, as we say, breaking bread, visiting their families, visiting their offices, visiting their plants and their manufacturing facilities, and really understanding and getting to know who they are and what their business. And so, frankly, I think an important part of it is the recognition that their banker takes the time to get on a plane and go spend time with them shows our commitment and our interest. And I think, as you know, I do it. I accompany my bankers to different countries because it's important that they know that they're important enough for me to get on a plane and for us to get on a plane and go spend time with them. Right.
That's interesting. So I want to ask you just because you're in. It's very excited to have you on the podcast because this is the first time we interview a CEO of a bank, and you're in a very unique and challenging position. South Florida, domestic, international. There's a lot of moving parts to the world of banking from your perspective, regulatory, economic, what have you. So I wanted to ask you, what keeps you up at night? Is there anything that you foresee that it might keep you up at night? I'm just curious about that, just to hear from your perspective, from a CEO perspective.
But there's no question, and given your audience, the obvious answer, it's top three, I would say, is certainly BSA compliance, regulatory requirements, the complexities behind that, the fact that most U.S. banks have run away from the fire of international banking to avoid the complexities. And we're charging into the fire because we're comfortable that there's an opportunity here if you do it right. And so staying on it, making sure we are doing it right. We are not just abiding by regulation, but leading the industry with best practices. And I think we do, and we spend a lot of time and effort and money in making sure that we do that is really front and center for me. I think secondly, and it's cliche, everybody says it, cybersecurity, right. Big issue, right? I think that's something that you could wake up one morning and your world has changed, so right. You never know if we're doing enough, right? We think we are. The experts tell us we are, but you don't know until something happens.
I know. That's true.
So cybersecurity is certainly a concern. And it's from a business perspective. The other thing that concerns me is the rising cost of deposits. I think that because of the uncertainty in the banking market earlier this year, we saw a huge increase overnight of cost of funds. And it really is putting a lot of pressure on margins. And I believe that if the rate environment stays like it's forecasted to stay with elevated interest rates for some time, that's going to put significant pressure on bank earnings.
Right. Okay. All right. Well, we've covered a lot of ground, and I'm sure we can cover a lot more. But I wanted to begin wrapping up as we're running out of time. But I wanted to ask you a completely off the beaten path question, and it has to do with music. Why? Because I'm a music enthusiast, avid fan of all kinds of music. I was thinking, okay, well, what can I ask him that's somewhat related, but I'm going to keep it more geographic. You and I are both from Miami, Florida, born and raised. Yeah. And so over the last 30, 40 years, there's been a lot of music that's been produced out of Miami. So I wanted to ask you, put you on the spot.
God.
Are there any, are there any, and we could do this in a multiple choice if you'd like, but are there any specific,
I'm getting nervous, Alberto,
Miami-based artists that jump out as some of your favorite music artists? And you know what, let's make this multiple choice. So let's go back to
I'll tell you what.
The 70s.
All right.
Okay, go ahead.
All right. So most people wouldn't guess this, but I am a fan of Pitbull.
Great.
I think he revolutionized, kind of that category of music, and I think he's an icon. And my kids always laugh about it, but I enjoy it. I think Pitbull is brilliant.
Mr. Worldwide. He used to be called Mr. 305 from,
exactly.
From Hialeah, and now it's Mr. Worldwide. That's a great response. So no need for multiple choice. That was
all right. So response. I survived your question. Oh God, I was sweating that one.
You did with a great response. Well, Calixto, thank you today for your time and your insight. I appreciate it. I know you're very busy. And for those who are listening, thank you for listening once again to our podcast. Stay tuned for our next podcast. And with that, I'm going to say goodbye to Calixto.
Thank you.
And we'll see everybody again soon. Thank you.